Hi, this is Mark McRae and thanks for joining me. Today's lesson is a continuation of the last lesson on trend lines and Fibonacci. If you haven't had a chance to review the previous lesson, then I highly recommend you go and do that now before continuing, as this lesson will make a lot more sense then. Just to add the trend lines that we qualified in the last lesson, that were here in a downtrend, this we qualified as an uptrend, and here we qualified as a downtrend. Now the question we left off with last time was, now that there was a qualified break of the trend line, should we go long? And one of the ways we can filter that potential trade is to be aware of the retracement levels, retracement Fibonacci levels. Now Fibonacci can be it's a big subject and it can be very complicated, but for the purpose of this lesson we are only going to use retracement levels, and we are only going to use two of those retracement levels, which are 38.2 and 61.8. So if we were to assume that this was point A, the start of the move down, and this was our first support area, valley, point B, and measured the distance between here and here, a 38.2 retracement level would take us to here. The market didn't achieve this retracement level. So now, if we move on, the market continued down, rallied to here, but still did not rally to the 38.2 level. The market continued down farther, and then eventually did achieve the 38.2% retracement level. The point is that even though there is a trend break, a qualified trend break, the fact that you know that there is a 38.2 Fibonacci level very close to that trend break would stop you going long, because we would assume that at the 38.2 level there would be some kind of resistance and possibly a turning point in the market. So if we drop down on the assumption that we are aware of there has been no rally up to 38.2, and there was a trend break and we were waiting for the 38.2 retracement level, we could drop down to the 1 hour time frame or a lower time frame, and here is a 1 hour chart of the euro dollar, which I have previously drawn in the lines that we qualified exactly the same way as we did in the previous lesson. Here we had an uptrend, the trend line was broken, it formed a valley, then a peak, and then at this point here the original support for here after the trend break was broken, which qualified this as a trend break. Now from our daily chart we knew that we were expecting some resistance at the 38.2 retracement level, and there was a high possibility that when there was resistance the market would retrace back or resume its previous trend, which it did. So on this break, how do we get short? First of all, we wait for confirmation with the trend line. Then there is a break of the previous support here. This is our signal to go short. We can place our stop above a previous peak, which would be here or here. And now we need a target. Using Fibonacci again, if we took this as point A, a significant low, sorry, I'll just change this. So this is a point A here to point B, and calculates our Fibonacci retracement levels. We can see here that the 38.2 comes in at this point here, and the 61.8 comes in at this point here. Coincidentally, the 61.8 converges very nicely with our trend line at this point, which is a confirmation signal that this could be where the market would reach. And the reason we would take 61.8 in the down move as opposed to the 38.2 is that we are now assuming the market is going short. So we want a reasonable size target. So let's just recap on this. We were originally trying to find some kind of direction for our trade, so on the daily chart of the euro dollar, we were looking for a trend break, which we got at this point here. Normally this could be a signal to go long, but we were aware of the fact that we were expecting a 38.2 retracement. We hadn't achieved it up until that point, so it would not have been a great decision to go long, knowing that there was resistance just above us. So rather than go long, we were looking for an opportunity to go short. We then switched to a lower time frame on the 1 hour chart, using the same techniques we used on the daily chart to identify a trend break. We saw that the trend broke or was confirmed at this point here, which signals short. We placed our stop above one of the peaks, and as a target we used the 61.8 retracement level of this move from here to here. It sounds a little complicated. It's not really. It's a very simple technique. I hope you've enjoyed this lesson, and I look forward to joining you in future lessons. Thank you.